Good day, traders. Stacey Burke from Stacey Burke Trading. Today, trying something a little bit different. I'm going to do these videos shorter and just focus on one specific niche, really sort of a bit more in depth and shorter videos, and break them into smaller videos for people to maybe digest a bit easier. So appreciate your feedback and let me know what you think about that. Today, just in this video, we're going to be talking about the importance of the daily charts. Now, again, lots of questions about which indicators do I use and all these other things. I don't use any indicators. I'm looking at highs and lows. Specifically at the timing of the high and the low of the month, the end and the beginning, midpoints of the month are very important. We'll look at some examples of this, and this can help me identify potential candidates for best trade setups. Again, three things that markets do. I cannot emphasize to people. I got a comment yesterday, hoping to catch a move. I'm not hoping to catch any move. You're looking for setups. So if you don't know what your setups are, you should stop trading and then figure out what your setups are instead of trying to go to the screen and catch a move. Catching a move is going to end up bad at some point. And when you actually have a mental switch that you understand you're only looking for certain things and retrain your brain that the trading is to, for me, training myself was to identify only certain setups. That was trading. Otherwise, I stay away from everything because that's what will end up destroying your account. And again, if you want to focus on scaling your business up, your trading business, and scaling your trade sizes up, focus on identifying what best trade setups are. So again, there's three things that markets do. They trend, they break out, they pull back and continue. Trading range. They may just trade up and down in a sideways range. We'll look at an example of that. The Swiss franc is a great example, but there are still potential candidates within that at the highs and lows. False break reversals, marginal new highs or lows. They trigger breakout traders at monthly highs, monthly lows, again, which obviously is going to be a weekly high, a weekly low. They reverse back inside, and often those will reverse entirely to the other side of the range, which again can give you a bias in your trading setups, even identifying a 3-day setup in an existing move from high to low of a month or low to high of a month. 1, 2, 3, 3-day setups. Timing. The end and the beginning of the month can be where breakout traders are triggered into new trades. They're trapped up high or down low. It triggers other time frame traders into the market. Longer time frames, daily, maybe monthly, weekly, bigger hedge funds, all those sorts of things. And so it's important to understand you can utilize, this is one of the most important things you can utilize to identify your best trade setups. These can be the ideal areas for daily charts to set up for those setups. New highs or new lows. Those are false break trades. Breakout pullbacks. The false breaks and breakout pullbacks are going to be usually a 3-day type of setup. First red day, first green day. And we'll look at some examples of those. So we're looking at the pound yen. We'll look at a couple of different pairs. The importance I want to emphasize is when a new month starts, we have breaks of highs or lows. You can mark off your monthly high and low. This was a great example this month. We'll look at a few pairs. Right on the first day, they triggered the low of the month. They've broken the low but pulled back, and then we have a bear candle. This is a 1, 2, 3 first red day setup in a broken down market. So these are the types of opportunities. Again, a market's broken down inside. They trigger this little pin through the low is a classic example of triggering stops, whether they're stop outs or sell stops. Coming back up, you'll notice they engulfed the first day of the month before having our first red day. This is a 1, 2, 3 first red day. Now, is the next day going to be a trade? I don't know until the next day, but I do know I have a 1, 2, 3. This trigger is not a false break. Usually if a month is going to fail at a high or a low, we will have a break of a high or a low that eventually fails and does not follow through. A trend trade breaks out, pulls back, and continues. Typically, a false break can be very quick. It can be a 2-bar reversal, or we can have a pattern that develops over a couple of weeks. This is the midpoint reversal. And again, we see the market fails to follow through. So if you're trading this pair, obviously intraday, these are the things that can help you identify when a market is going to follow through, when it fails, and when you're going to get potential trade setups intraday that are going to be low-hanging fruit for explosive moves, as we saw yesterday on several pairs in the up and down direction. So again, timing, the monthly timing cycle is critical. This was a great first 3 days of the month. You'll notice often that the first 3 days of the month will set the initial balance, as I talk about even in the beginning of the week, Monday, Tuesday, Wednesday. It can set the initial balance for the month as well. You can scroll through whatever, I get this question a lot. Does this work on this? Does it work on that? Every market's the same. It has different participants, but overall markets behave similar, especially on longer time frames. The Swiss franc is a great example of a market that for the most part in the last few months has traded sideways, but this can offer traders some great opportunities when a higher or low is broken. We see an example, 1, 2, 3, first red day. Obviously, there was a follow-through red day after first red day, 1, 2, 3, first red day. And when we see markets like this and they break new highs or lows, again, 1, 2, 3, new high, new low, we saw some great short trade setups, ends of the months, beginning of the months. Whenever a weekly high or low is broken inside, again, we look for, is there an ideal setup on the daily chart? If not, well, then we come back until a new trigger shows up in our, whether you're checking it manually or if you have a scanner. I just check these manually to see if they've broken levels. Obviously, I will mostly focus on gold, NASDAQ, oil, but see, even with oil, I'll look at the Canadian dollar because we'll see some similarities in the behavior. Aussie dollar correlates sometimes with gold, but my important sort of focus is when they get to these levels at the timings, we can see some very good opportunities. We have a 1, 2, 3 down, first day of the month. We have an explosive move back in first red day. This is a trap. They've already had a false break reversal. This could start the move back up. This is a 1, 2, 3 first red day in an upward moving market. So these are the sort of things you can look for in a trading range type market, especially at the ends and the beginnings of the month. We'll often see them break new highs towards the end of the month or the beginning of the month. And again, that can set up for an opportunity. And you have to remember who's in the money. Somebody's in the money. We have a 1, 2, 3 first red day. Bang, they come right back into traders who were in profit from the end of the previous month. Canadian dollar, again, we had a consolidation last month, and you can see the master pattern. They trigger breakouts on the long side and come straight down at the beginning of the month, 1, 2, 3, trigger breakouts on the downside. And then we have an explosive move back up to the high of the month. So again, the importance I'm emphasizing is that if I have a monthly high or low triggered, we could have a couple of different scenarios setting up. Again, we could have a false break reversal trade set up, which could set a bias for a pair for the new month. We could have a breakout pullback, false break reversal. We could have a trend trade. We could have a 1, 2, 3. We could have first red or green day, which again is the 1, 2, 3 setting up, which we saw on gold, oil. We'll look at the NASDAQ because we have a 1, 2, 3 down inside the low of the year. Again, oil peak formation high. This is high of the year. You'll remember not too long ago, oil, they couldn't even store it. They didn't have any room to store it because the price was so cheap it actually went negative, all those stories. But again, we see right off the bat, they break out. Now, that's a breakout candle, a big, large breakout candle. A false break typically is going to be just like we see here. Breaks the low, pulls back. We can see creeping trends. They break out slowly. Right at the end of the month, it keeps going higher, creeping trend. This is, again, if you haven't got Peter Brandt's textbooks, Classical Chart Patterns, Professional Commodity Trader, or Schabacker's book on Classical Chart Patterns, I get charts from people all the time with all these indicators and everything else. I'm looking for some simple setups. I'm not trying to catch every move. I'm looking for the market to give me setups. Look, we're at the high of the year. They go 1, 2, 3, first red day. It explodes and goes further. We get a gap breakout on the Monday, first red day, high of the year, high of the month. Tuesday follows through, inside bar, up high, shorter time frame. We had a double top, then a creeping trend back into the high with 3-push pattern. That market fell $20 from high to low last night. That's 2,000 pips. But, you know, are we in a collapse? I don't know. I know that breakout traders are still not been stopped out from the gap from the break of the previous month's high. They've pinned down into that trader, but we still have a gap below that. This market could collapse. I don't know. Maybe they're going to find support and retest the high. I have no idea. But I do know that we can, you know, that's a monster move. Gold, again, inside. We had a 1, 2, 3 double inside bar right at the beginning of the month. They broke out of the last day of the month inside that pin formation high. Obviously, we've had all this world tension, invasion of Ukraine, all these sort of things. But we had a double inside bar, which is an explosive opportunity either for reversal or continuation. And in this particular case, obviously, the market exploded and went vertical. And we had a 1, 2, 3 up. Now, yesterday, again, we had a double top on the high of the week on gold. They put a lower double top in yesterday in the Asian session into the gap. Is this market going to break down? I have no idea. But I do know that we had a great opportunity yesterday at the high of the month, high of the year, high of the day, high of the session. London went up inside of the high and low of Asia, inside the double top, and put in a lower high and rolled over and fell from the London open all the way down, and it's still continuing to fall right now. If we look at the NASDAQ, again, right at the timings at the beginning of the month, they took out last month, broke out of the lows of January, pulled right back inside. We had a bear candle, bull candle, bear candle inside, right inside the low of the month. That's a first red day in a broken down market. The next day gave a great short trade, and it fell 1, 2, 3. And this pin, we'll take a look at this chart on the 15-minute, this pin up. So we have a 1, 2, 3 down. Traders are shorting this, hoping it goes down to the low of the pin. And this market broke down on Monday, Tuesday. But what we see on Tuesday is an interesting pattern. And if you haven't seen this pattern before, print this chart off and go study this. This is a Wyckoff pattern. Variation of this pattern, and it's not exactly the schematic too, but they came down and they put in the higher high, break down without taking out the low, coil inside ascending triangle, and they take out the high of that middle structure. We had a nice ascending triangle heading into the open of London, and this market proceeded to auction back up straight up to the high of Tuesday. Now this market could fail. This market could fail and roll over. I don't know what it's going to do, but I do know that traders are trapped down low now, shorting this market. We have an engulfment. This could be a trap 1, 2, 3 up, and this market could fail and retest that low or consolidate. I don't know, but I do know we had a 1, 2, 3 down, and we on the shorter time frame we had an accumulation pattern setting up for traders to be going long back towards the high of where that middle structure was. Now at this stage, I don't do anything. I just wait. Euro first red day engulfment down low. Traders are forced to sell down low, but it all boils down to what happens on the day. Not just getting in on the daily chart. It's about what happens on the day itself in terms of the intraday structure of the market. British pound, the same thing. Broken down market, day 1, day 2, day 3, first red day, and the thesis is they're going to the low of the month. There's people sitting down here with stops, breakout trades underneath. They're always going to go and get the guy in the money, and again, they want to just maybe trigger breakout traders, whatever. There's obviously significant levels. I'm not trying to make anything super complicated. I'm looking for simple setups. I've already said that I'm biased to the short side. So get this thinking out of your head, hoping to catch a move or trying to catch a move. Go to the screen with a thesis. If it's not there, train your brain to not trade. Like, really, I cannot emphasize that enough. Train your brain to not trade unless you have an ideal setup, because if you start chasing moves, you'll go into tilt. You'll do all kinds of crazy stuff. Rewire your brain to look for best trade setups, and that's what trading is. Understanding what your best trade setups are, and then that's all you do. So hopefully that helps. A little bit longer than what I wanted to, but just the importance of the timings at the ends and the beginning of the months and the midpoints of the months. If we break out the midpoints, what's midpoint? Well, there's 20 trading days on average in every month, so maybe 10 days. We could count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days, engulfment at the high of the month, bang, straight down back to the low of the month, back into traders who are caught on the breakouts. Just little things like that. So these are things that can help you. They're high of the week trades, 1, 2, 3, first red day, step back, look for the best moves, and then line up the shorter time frames with your daily charts. Those are the ones where you can scale into with some size and hopefully capture some big moves with zero heat or very little heat, locking in some significant profits and really growing your trading account. Have a great trading session. May the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.